Hey, welcome back, guys, to my YouTube channel. As I got a feedback from many of you, in the first video, there was a lot of disturbance in the audio and the video quality. Okay, uh, so yeah, that's the reason I came up with the presentation for the ma mastering auction market theory. Okay. So hope you guys know me, or whoever has watched my channel. So let me introduce you myself. So myself is Rohit Sawant. Okay. So basically, I'm an IT employee. I have more than 10+ years of experience. I also worked with the big companies like Microsoft, AB and Bev, the biggest brewery brand in India. Okay, and I do have a share market experience for more than 8 years. I have come across various theories and fundamentals, but I did not get the desired result, or what we call like the 90% traders are making loss in the market, and only 10 to 15% traders are gaining the profit. Yeah, that's the reason I came across this theory, and this theory is very simple. It is not like any rocket science. You have to just focus on the volume notes, the market profiles. Yeah, that's it. Yeah. And for today's agenda is like what we are going to, study about auction market. Okay. What is auction market? What exactly is fair value gap? What are market players? And my favorite, like the balance and the imbalance concept. Okay. So let's move ahead. Yeah, I forgot to introduce my channel. So my channel is Auction Market, and my channel handle name is Auction Market RS. Okay, please do visit the channel. Do like, share, subscribe, and share your love so that I can grow my channel, and parallelly I can share the knowledge with you guys as much as possible, free of cost. Okay, so let's begin. What exactly is auction market? So in the previous era, okay, in 1980s kind of a thing, people were not having that feasibility of online services, so everything was a paperwork over there. So you might have seen the web series Harshad Mehta, where he goes and buy and sells the share in the mandi. We call it mandi, or we call it as a NSE stock exchange, where you go, you manually buy the shares, you sell the shares over there, and a lot of people will be auctioning, willing to pay the bid, and the sellers indicate, try to accept that particular bid, and at the price which the buyers and the sellers meet, there the contract completes. Okay, so I'll just brief you. This auction market is a trading venue where buyers and sellers interact to determine the price of an asset. The asset can be anything. It is index, stock, commodity. Okay, through the competitive bidding. So bidding has to be very competitive. It cannot be like uh, less aggressive, or very aggressive. It should be a competitive. It should be between the fair value range. Okay, in this system, the buyer indicates the maximum price. Well, buyers are always trying to buy at the low price, willing to it's called a bid, and the sellers indicates a minimum price. The sellers try to get as minimum price as required compared to buyers. Okay, and at the price which the buyer and the sellers come at a fair value price, and if the price matches, then the contract gets closed. This is called an auction market, where everything has to be done manually, and we have some control over the market, control over the price. The buyer and seller are aware, like at what price who is buying, and at what price who is trying to sell it. So we have the competitive data with us. But if you go with the normal price action, the normal candlesticks pattern, you don't get that visibility what we get in auction market. Okay, hope you are guys with me till here. If you have any doubts, please do reach out to me, comment on the video. I will try to clear your doubts there. Okay, so we'll next move to the next slide. So what exactly is a fair value gap? So I'll just try to brief you initially, then I will read the PPT. Okay, the fair value gap is the difference between the first candle and the third candle. As you can see in the diagram, there is a huge gap between the supply and the demand. The supply and demand gap needs to be filled. When it's a bullish, whether it's a bearish, doesn't matter. That particular gap has to be filled. Okay, so now let me just tell you technically. Fair value gap is a price that occurs when noticeable difference between the closing price of a candle and opening price of a candle. Okay, so there is a difference between your opening price and closing price of a candle between the first and the third candle. Okay, that particular gap is called a fair value gap. So this particular fair value gap, where you can see in which time frame, you can observe it at 5-minute time frame, 10 minutes time frame, 15 minutes. Okay, so whichever suits you the best, you go open that particular time and try to identify that particular fair value gap and just mark that particular section. Okay, so this is at the candle level, 3 different candle level. Okay, let's move to the next one. So how do you identify the fair value gap in a single candle? This is one of the best concepts which you don't find in normal candlesticks pattern. You can see in a cluster chart. Okay, we have that cluster chart setting. I'll show you in the upcoming videos. So here you can see at the right hand side you have a buyer, in the left hand side you have a seller. When you have 3K buyers, there are 0 sellers. This is a fair value gap. Okay, so you can see this is a negative candle. So we will talk in terms of bearish market. Okay, so 5.7K sellers we have. So in front of that, how many buyers we have? 1.8K. So there is a huge gap in the market where sellers are trying to sell their products or sell their quantity, but they're not getting enough buyers. So the quantity is not getting filled up over there. So sellers jumps to the next part. Okay, next level, 33K buyers, 33K sellers. But we don't have enough buyers over there. We have only 27K buyers. Even this is a fair value gap. 58K sellers we have, but in front of 58K sellers, we have only 44K buyers. This is also a fair value gap. Okay. For 36K sellers, we have 20K buyers. So this is how you try to identify the fair value gaps in the market. That too in a single candle itself. Okay. So let me move to the next slide. Yeah, here is the best example. Okay, whenever you see a fair value gap, immediately the next candle tries to fill the gap. So you can see the next candle is trying to fill the gap, leaving a wicks. Okay, the price went up to there, fill that particular 33K and 27K. There is a difference of somewhere around 6K. So that 6K gap is been filled by the next candle, and the gap filling is denoted as is a sign of a candle wicks. Okay, so that's the reason you see a wicks over there, and so on the market continues. Okay, let me move to the next slide. Hope you guys are trying to understand this. I'm trying to explain you in much layman language. There is nothing technical here. Left hand side you see a seller, right hand side you see a buyer. Okay, let me move to the next slide. So what are market players? In the last video I talked about this. So market players are something like who is trying to capture the market at the market price, and the other player is trying to hold this position at a respective price. So take an example, market orders. Okay, market orders are also called as market players, and we have something called as limit orders and limit players. Market orders are placed wherever the current price is going on. So take an example, the current price is 100 rupees. So I just go and place an order directly without even bothering whether it will go at a bullish side or a bearish side. So I will place my order on a market order. So market order is 100 rupees. Okay. So I will place the order directly on the market order. So that is called a market order. How about limit order? Limit order is something, if the market price is initially is at 100 rupees, going on at 100 rupees, I place an order at 105. Okay. Or I place an order at 95 rupees. So whenever market comes to that particular level, my order get executes. So this is the basic difference between the market order and limit orders. These two players play a very crucial role, but more than market order, limit order plays very important role in absorption and exhaustion concept. Okay, so I will explain you that in the further part. So yeah, here is an example of market order and limit order. Okay, so whenever somebody is trying to buy at the bottom, okay, somebody is trying to buy at the top or a bottom and the price crosses, then we need to understand, like, if the price is not going up, so suppose the price is going up but at certain resistance it is not able to cross, so we have to understand we have a limit sellers over there. As you can see in the first picture, we have a limit sellers over there. They are not allowing the price to go up at the desired level. Why? Because we have a limit sellers for that particular point. So that's the reason the price is not going up. Okay. And the similar happens with the limit seller as well. When the price is going down at a certain level of resistance, the price won't go down. Why? Because at the support, we have something called as limit buyers. Limit buyers, you cannot just see with your visible eyes. That you have to read the order flow charts. So I will explain those order flow charts in the upcoming videos. Okay. So yeah, here is the best example for limit orders. So the price is coming down. Okay. So the price is coming down, and you can see that particular box. Okay, that particular box, what you can see is a kind of an absorption happening over there. They're not allowing the sellers to go down. So limit buyers are trying to acquire as many as positions. Okay, so suppose, take an example, that for that particular box the price is 100 rupees. Okay, and limit seller are only 50 and limit buyers are more than 1000. Okay, so whenever the seller is trying to come, their quantity is very less, so that's the reason they're not able to push the price down. So for that particular time the price got stuck over there. Okay, so as soon as that particular price tries to break that particular box, you can see there will be a fake breakout, so that as many as sellers come into picture, and then from there the aggressive buyers try to take the new positions. The new buyers will come into positions. This is how your stop loss hunting takes place. So this is called an absorption. Limit buyers are trying to absorb the market players, the market orders. Okay, let me go to the next one. So this is a very good example of limit sellers trying to absorb the limit buyers at the resistance. They're not allowing the price to move ahead. Why? Because already the limit buyers have placed their orders far ahead before the market start. So that's the reason the market suddenly started falling from that particular player. So we have to understand The zones, these zones are very important. So the blue lines, what you see, those are called the volume nodes. Okay. So I will explain you this particular zones, how to plot it in the upcoming videos. Hope you guys are with me. Okay. Let me move to the next slide. Yeah. What about balance versus imbalance? So, this is a very interesting concept, guys. Balancing in day-to-day activity, we have something called as a lifestyle. Okay. There we try to balance our work-life balance plus our personal life. We are trying to balance with a work-life balance. Okay. Balancing is formed due to a responsive action. Okay. You make a note of this. And imbalancing is formed due to initiative price action. What exactly is responsive price action and what exactly is initiative price action? Okay, so that we will discuss in the next video, in the next slide, sorry. Okay, so balance price okay is also called in responsive price. So balance is something like you balance between two zones. Okay, you have two zones, one support and one resistance. So the price will be moving between the support and resistance region. That particular thing is called a balance region. So we'll try to explain, understand this particular example with some uh, live purchase and sales order. Okay, for a moment consider you are an iPhone dealer. Okay, and your job is to buy and sell the iPhones. Just imagine, okay, there are too many buyers and too many sellers in the market. And currently the iPhone is trading between the range of 25,000 to 30,000, the iPhone 6. Okay. Just an example. This price might vary in different parts of the country due to some, tax or some other reasons. Okay. But this will vary between 25,000 to 30,000. Okay. We consider this price as a fair value. Okay. Because the price is between a particular range, a particular support and resistance. Okay, so let me move to the next one for a better understanding. Now, whenever the price trades around 25,000, 25,000 is the base price, the support price. So at the support price, it is a very good opportunity to buy that particular product at a lower band, at a lower value. You can expect that price to move to 30,000 and you will gain a profit if you sell at the higher price. This is nothing but an responsive activity. So you're trying to respond on certain things. And more specifically, it is called as a responsive buying. A responsible buyer tries to buy the product at a responsive price. Okay. We all are responsive buyers in the market and we want the product to be valued and it should be a fair value so that there should be a balance maintained in the market. Okay. So later when the price traded at 30,000 or above, it is a good idea to sell your holdings and you can also go short. So exactly reverse need to happen over there. I'll show you in the upcoming slides with the diagram. And you will anticipate that the price might fall back from 30,000 to back to 25,000 and you will make enough profits and close your positions. This is also another form of responsive activity and more specifically it was called as a responsive selling. Same like responsive buying, we have to initiate the responsive selling as well. This situation will continue until we do not have any unexpected event like any elections or any positive or negative results about the company. Okay, till that time it will be under a fair value gap. The price will be balanced. Okay, and buyers and sellers will have a decent profit. So this situation will change in case of any sudden uncertain events unless and until it will act like a fair value gap. It will be a balanced margin for both buyers and sellers. So now what is imbalance? Imbalance is exactly opposite. So take an example of your life scenarios when you be at your home, okay? you be in a balanced manner. You don't act to be an imbalanced state. Okay, so when you be in a home, you act like a matured guy. When you be in an office, you act like a matured. You behave yourself in a proper way. So that is called a balanced manner. When you go out of certain limits, okay, when you go out of office for any outing, for any vacation, there you become imbalanced. So this is, a very good example. This is how you can, try to memorize. When you go out of your boundary line, that is where your price become imbalance. Okay, so we'll try to understand this with a certain example. So, so imbalance is also called an initiative activity. You try to initiate it. Okay, to explain this concept, you have to make one or more assumptions. Imagine suddenly Apple company has decided not to supply iPhones to India. Okay, so there might be various reasons. They want to supply it to some other country to gain more profits. That's the reason they have stopped supplying to your country. Okay, as a premium dealer, he might get more profit. Okay, but this information is not yet leaked outside the organization. Okay, then what do you think? If Apple doesn't want to sell their iPhones in your country, then what do you think? Like how the price action should behave? So it will be a panic situation. People will try to buy the available iPhones in the market at whatever price it gets. Okay, so it will cross the limit from 30,000. So that is called initiative bias. Imbalance, the price will not have control once it moves from balanced state to imbalanced state. So we usually ask the traders to book their profit in imbalanced state. In imbalanced state, you can earn like anything. So the price movement is within the fair value gap, you will have a limited profit. But when the price movement goes from one volume area to another volume area, you can expect a very good profit. Okay, that is what this initiative is called. So now it's time to make some more assumptions, okay, about the sellers. So buying concept is clear, I think, you guys. Okay, so now we will understand how about the selling concept, selling initiative. It is the time to make more assumptions. So now iPhone company was not trying to sell the product in your country because they want to deliver to some other country. Okay, just because they want to gain more profit. Now what happens? The government has decided to ban the iPhones. So if government had decided to ban the iPhone, then definitely there will be impact. Nobody will try to purchase new products, because if you try to purchase a new product, how about the service which you get after purchase? That will be a very panic situation, right? You won't get any service if government bans that particular product. Okay, so people will try to sell that product aggressively at whatever price they are getting. Okay, so this is called an aggressive selling, imbalanced state of selling. Here also you get a very good opportunity to earn the profit in the imbalance sell zone. As in the diagram you can see it. Okay, in the upcoming slides I will try to make it more easier for you guys to understand it. So yeah, here you can see the limit is between 25,000 to 30,000. Okay, so between that limit, that particular area is called a fair value area. Fair value area is a range where you have one support, you have one resistance. You have one volume node as a support, the another volume node as a resistance. But once that particular price, so that particular region is called responsive sellers. As you can see here, the resistance is called a responsive seller, the support is called a responsive buyer. Once it crosses the 30,000 level, okay, then the price will run like anything, because there is a panic situation. Then initiate the buyers. Okay, the same happens with the initiative sellers. If they try to understand, is government trying to ban that particular product, there will be a panic. Nobody will try to purchase that product, they will try to sell that particular product. This is called initiative sellers. So this is, the very basic concepts of auction market theory, where everything is relying on the support and resistance, and how support and resistance are derived. The support and resistance are derived from the present day auction market, the present day fair value gap, the present day volume nodes, at what particular point support consider at 3000 there was a very huge buying and selling activity happening, so that particular zone will act as a strong support or resistance for the next upcoming days, unless and until that particular level breaks. you know the price will be moving between support and resistance. Once that particular area breaks, then you can see aggressive buyers or aggressive sellers, coming into picture. So those aggressive buyers and aggressive sellers are the fresh aggressive buyers and fresh aggressive sellers. Initiative buyers and initiative sellers, what we call them. Hope you guys, tried to understand what exactly I was trying to convey the message for the auction market. Right, so in the upcoming videos I will try to bring up some more live examples about the volume node, the market profile, the volume profile node, how to plot them in the graph. You have seen in the previous videos the live trading. I'll show you how to book the profits, where exactly to enter. Okay, and guys, please consider this channel as a educational purpose, because I'm not any registered RA or any SEBI registered research analyst. Okay, so this video is just for an educational purpose. Okay, but yeah, you can learn a lot from this. You have to do a back testing whenever I share this kind of PPT or share any such indexes. Okay, please do like and share this particular video with your friends, family. Do watch this video. My YouTube handle is Auction Market RS. Okay, do visit this channel. Okay, thank you guys. Thanks for your valuable time for watching my video. Okay, see you in next video. Bye bye.